Assalamualaikum warahmatullahi wabarakatuh. We are from Group 10. We're recording this video to present about our topic on taxes on foreign trading companies. First of all, I need to introduce me and my group members. First one is me, Cindy Nabilandri. Second is Nadratul Hikmah. Third is Richard Julian Antonio. Our presentation consists of five main parts. First is introduction. Second, tax subject and object. Third, tax rate. Four, problems. Five, withholding, deposit, and reporting procedures. The first part about introduction will be presented by Richard.
First one is introduction. Taxes on foreign trading companies. The notion of foreign trade representative is not explicitly stated in Law Number 7 of 1983 concerning income tax as last amended by Law Number 36 of 2008. However, the provisions of tax objects for foreign trading companies that have a trade representative office in Indonesia are regulated in Article 4, Paragraph 1 and Article 15 of the Income Tax Law. The provisions of Article 4, Paragraph 1 of the Income Tax Law stipulate the definition of income as a tax object in general. Net income for a foreign trading company that has a trade representative office in Indonesia is regulated in Article 15 of the Income Tax Law, where the net income is calculated using special calculation norms. The formulation of the provisions of Article 15 of the Income Tax Law is as follows. Special calculation norms to calculate the net income of certain taxpayers, which cannot be calculated based on the provisions of Article 16, Paragraph 1 or Paragraph 3, are stipulated by the Minister of Finance. The implementing regulation of the provisions of Article 15 of the Income Tax Law for foreign trading companies that have a trade representative office in Indonesia are the Decree of the Minister of Finance number 634/KMK number 4/1994 dated December 29, 1994 concerning special calculation norms for net income for foreign taxpayers who having a trade representative office in Indonesia, whose implementation is further regulated by the Decree of the Director General of Taxes number KEP 667/PJ/2001 dated October 29, 2001 concerning special calculation norms for net income for overseas taxpayers who have a trade representative office in Indonesia, which is amended by the Decree of the Director General of Taxes number KEP 667/PJ/2001 dated 28 February 2002. The essence of taxation of the permanent establishment of the trade representative office is as follows. First, payment of income tax for foreign taxpayers who have a trade representative office in Indonesia is 0.44 of the gross export value and its final. Second, what is meant by gross export value is all replacement value of or compensation received or obtained by a foreign taxpayer who has a trade representative office in Indonesia from the delivery of goods to an individual or entity that is or is domiciled in Indonesia. And the last one is net income from foreign taxpayers who have a trade representative office in Indonesia is set at 1% of the gross export value.
Next is tax subjects and objects. The tax subjects of this Article 15 PPH are foreign taxpayers, or WPLN, who have a representative office in Indonesia, who come from a country that does not yet have a double taxation avoidance agreement, or P3B with Indonesia. Meanwhile, the object of tax is the gross export value, namely all replacement value or compensation received or obtained by WPLN, which has a trade representative office in Indonesia, from the delivery of goods to an individual or entity that is nor or is domiciled in Indonesia. Next is tax break. Regarding the application of 0.44 tariff, the Director General of Taxes provides confirmation through his letter number SE2/PJ03/2008, dated July 31, 2008, concerning confirmation of the application of special calculation norms for net income for overseas taxpayers who have trade representative office in Indonesia. The 0.44% PPH calculation come from the amount of PPH payable, which is calculated based on the norm and branch profit tax or BPT. Or PPT Article 26, paragraph 4 as follows. Income tax payable is 0.30% and BPT with 0.14%, which makes the total income tax is 0.44%. The Director General of Taxes also confirmed that the foreign taxpayers referred to in KEP 667 are foreign taxpayers who come from countries that do not yet have tax treaty in Indonesia or non-treaty partner. In addition to that, in SE02, the Director General of Taxes also emphasized that foreign taxpayers who come from treaty partner countries in Indonesia, the amount of tax owed is adjusted to the branch profit tax rate as stipulated in the tax treaty. Next, the last two topics about problems and withholding procedures will be presented by Nada.
For problems, the question is often encountered whether a foreign trading company that has a trade representative office in Indonesia is a permanent establishment. In terms of the tax subject, to determine whether the foreign trading company has a permanent establishment in Indonesia or not, it is not necessary to see whether the country of domicile has a double taxation avoidance agreement or P3B with Indonesia or not. First, if the country of domicile does not have a tax treaty with Indonesia, then based on Article 2, Paragraph 1 and Paragraph 5 of the income tax law, a foreign trade company that has a trade representative office in Indonesia, in order to run its business normatively, a foreign trading company has a permanent establishment in Indonesia in the form of a permanent representative office or BUT. Next, if the country of domicile has a tax treaty with Indonesia, it is necessary to see whether the trade representative office is included in the definition of PE as regulated in the tax treaty. Thus, if the foreign trading company has a permanent establishment in Indonesia, Indonesia has the right to tax the income from the business that the foreign trading company receive. The fulfillment of tax obligation in Indonesia is carried out through the permanent establishment of the trade representative office. 5. Withholding, deposit, and reporting procedures. Payment and reporting of income tax from WPLN, which has a trade representative office in Indonesia, and its administration at the tax office are carried out as follows. First, WPLN that has a trade representative office in Indonesia is obligated to pay income tax payable during a tax period to the Perception Bank or Post and Giro office by number later than the 15th day of the following month after the month where income is received or earned, using one final tax payment or SSP. Second, WPLN that has a trade representative office in Indonesia is required to report PPH payments made to the tax service office number later than 20 of the following month after the month of income is received or earned, using the form according to attachment 1 KEP 667/PJ/2001 and attaching it with SSP final third sheet. The discussion of the Article 15 income tax series is further related to tax on companies investing in the form of build, operate and transfer or BOT, which are usually related to projects provided for infrastructure such as toll road construction, subways, land, and others.
That is the end of our group presentation about taxes on foreign trading companies. I hope to whoever watched this find it helpful, and I'm sorry if we made a mistake here and there. And thank you, and assalamualaikum warahmatullahi wabarakatuh.